The Federal Emergency Management Agency website has an interactive map that can help determine flood risk in your area. Simply by entering your address or zip code, one last thing to keep in mind with the few exceptions, there is a 30-day waiting period before flood insurance goes into effect. It's best to shop well before you think you might need it. Like flood insurance, earthquake coverage is offered by many insurers either as an option or as a separate policy. Unlike flood insurance, rates are set by the insurer, not the federal government. That means that the cost of your policy will depend upon your insurer, your location, the type of home you're on, and many other factors. They determine the types of coverage you should buy. Start with the most obvious factors. If you live in or are looking at homes in an area prone to floods, earthquakes, wildfires, or other extreme weather, look for a policy that provides coverage for those types of events. Keep in mind, these types of coverage are not usually included in a standard policy, and some insurers may not provide coverage at all. Next, determine what it would cost to replace major items such as your fans, water heater, roof, or your entire home. Talk to an independent insurance agent. Call insurance companies directly or check company websites for guidelines. Take an inventory of your possessions, including your vehicles, artwork, and other valuables. Consider what it might cost to live with relatives in a hotel or in a rental unit while your home is being repaired or rebuilt. A basic rule of thumb is to make sure you buy enough coverage to replace your home and its contents. Be honest in your assessments and make sure that any policy you consider will be sufficient. Homeowners insurance replacement cost. Most insurance companies will offer you a choice of two types of homeowners insurance policies: a cash value policy or a replacement cost policy. For most people, a replacement cost policy is the better option. The reason is that replacement cost coverage policies pay for the actual cost to repair or replace your home and possessions at current prices, or at least come close depending on the limits of your policy. A cash value policy caps the amount you will be reimbursed for your home and its contents less depreciation. For this reason, a replacement cost policy is usually a better bet if your budget allows it. Replacement cost policies generally cost more than a comparable cash value policy, but the difference could be made up quickly if you have to make a claim. Depreciation is a big deal, said Amy Batch of Consumer Advocate Group United Policyholders. It's much better to have replacement coverage because that's what you need to rebuild your home. You need to balance price and value. Many things can increase rebuilding costs over time. Some factors include labor and material costs, housing demand, change to zone requirement.